Let's make round 2 on this thing. All right, we should have sound now, which is good. All right, we should be good to go now. Let me just share this screen once again. All right, so sorry about that, guys. Looks like do we have is audio back now, guys? Do we have audio? Looks like we've got audio. Looks like we're all good to go. Yes, we do. Fantastic. All right, cool. All right, there we go. There we go. John, thanks for the live stream. All right, we are good to go. All right, fantastic. All right, guys. So let me just give another few minutes, and then I'll let everyone log in. And guys, can you guys give me an A in the chat box if you can hear me? Okay. That way I know we're all good to go. Hey, all right, fantastic. All right, welcome back, guys. Welcome back. Don't know what happened there, but audio just cut out. But now I am ready to rock and roll with this live stream today. Oh, air. Yeah. Yes, I'm gonna walk you guys through a powerful trading technique you can use when you are trading the market. So let's just give it a few more minutes for people to log on, and then laugh. Oi. So I hope firstly, guys, before I do start, I hope your trading has been going really, really well. Trading has been very, very, very phenomenal for me lately, guys. Just really been focusing on my own trading, focusing on my own setups, doing a lot of back testing, do a lot of research, building my confidence. So the trading, the coaching things I do, and also the Facebook stuff and all sort of stuff. The thing that for me personally is my trading is my number one, is my coaching is my second. So I spend a lot more time focusing on my trading. And then when I get a bit of spare time, I like to do some YouTube videos and stuff like that just to help some people out. But my main focus has been trading. I haven't done a live stream in a while, so I thought I would do this live stream for you guys and to help you guys out and all that down home country goodness when it comes to your trading. So that's what my focus is. So trading has been absolutely amazing right now, guys. Absolutely amazing. So yeah, I'm just really excited and doing really well in trading right now, really kicking butt. So I wanted to share with you guys something that's going to really help you when it comes to your trading, when it comes to your analysis. So let's get straight into this right now. Firstly, guys, this is not financial advice. This is educational only. Past performance doesn't equal future performance. This is just general advice only to help you. This is education only. And this doesn't go into your personal situation. And it doesn't mean you should take a trade based on what you're seeing right now. Obviously, there's a lot more that goes into trading than just understanding this one trading technique. So be smart about the way that you're doing. And there's a whole wide range of things that goes into help you become a much better trader, which is timings, which is stop losses, which is risk management, all those type of things that help you become a much better trader. So with that being said, let's get straight into it. Now, one thing I want to share with you today is, obviously the title of this live stream is use this powerful trading technique in your own trading. And here's the thing. Obviously, we have a trading system, okay? We have a trading system and we're trading the markets. And when you're trading the markets and you have a trading system, one thing that's so important to understand is, how do the markets operate and how do the markets work? Because if we can understand how the markets work, we can then expect something to come from the market. Right now, the word expectation, it should be removed from your vocabulary when you're trying to trade the markets. So when you're trying to trade the markets, it's so important to say, okay, when certain things happen in the market, that's going to give us a high probability. That's going to give us a high probability that X is likely to happen. So, and this is all about understanding how the markets work and how to read the charts, and then start to apply your trading system around this here. So, for example, if I bring up, so I'm looking at a chart right now. Let me just squeeze this chart. Let me squeeze this chart right up here. And I'm gonna bring this chart up here, and right now I'm looking at SYB, right? SYB. This basically soybeans. I've actually got a position on soybeans right now, so it's one of the reasons why it's up. But apart from that, I've got a position. I've got an option trade on this particular SYB, not a soybeans position. Like, I'm not shorting soybeans, but I've actually got a position on soybeans, like SYB. So the thing is this, is that how the markets work and how the markets operate is they go through a couple of different main phases. And the thing is that when you start to identify these main phases, you can really get a good glimpse, or get a good understanding of what is likely to happen after certain things happen in the markets. So what the markets do is they go through different phases. They go through a price and time phase. They go through a price phase and they go through a time phase. Now, essentially all that means is this. A price phase is when the market is having a really big run. All right. So the market is, if I look at this particular soybeans right now, you can clearly see that the soybeans, pretty much before this, we had this big drop down from here down through to here. You can see that that was obviously what you call the price phase. But before that, look at all this sideways movement. This is what you call a time phase, because the time phase is where the market is just resting. The market is just not doing much, and it's just going sideways. There's not much going on when it comes to the markets there. So one thing that's so important to understand when you're trading is what are certain things when certain things happen in the market. So for example, as this market goes sideways, and I'll give you a really good example of gold here. All right, so as a gold. Now, gold, what did gold do? And this is what you call a chart pattern. Okay, so gold is obviously, this is a chart pattern here, and there's obviously a few moving averages on here. So let me see if I can just bring up this one through here. Let me see if I can just do that. All right, cool. So I'll take everything off the screen here so you can see what I'm looking at here. So when you're looking at the markets and when you're identifying the markets, you're going to go through a couple of different phases. You're going to go through a price phase where the market's gone through a big run. You can see how this market went for a big run through here. And then you're going to go through what I call a time phase where the market is just going sideways. It's not really doing much. And this is really, really key, because if you can, when you're trying to jump on a trend, when you're trying to trade, the biggest thing is when you're trying to trade, right? You're trying to jump on, you're trying to get into the market when it has a high probability chance of it continuing in that direction. Now, how the markets work and how they operate is, if the market goes sideways for a long period of time, if the markets go sideways for a long period of time, then that means when the market goes sideways, that means when it does break out, we are now likely to have, depending on the length of the sideways movement, or depending on the breakout. So as you can see here, that we actually had this sideways movement here for about 3.5 to 4 months. So due to the fact that we actually had 3.5 to 4 months, once it broke out, you can see that we have now had 3 months of downside. Now, I really thought we'd get a month or two out of this. Now, 3 months, I didn't know. But when we're talking about probability in the markets, when we're talking about how to stack the odds on your side, the probability on your side of doing well in the markets, then what you're looking at is you're just understanding, okay, then once this breaks out of this big sideways movement here for quite some time, then we have a high probability chance of moving in that direction. Once it breaks out in that direction, moving in that direction for quite some time. What I mean by that is you can see here this sideways phase through here where it's just not doing much. And then once we got the breakout, yes, we do get stair steps. Yes, we do get a stair stepping phase, right? So, but once we get the breakout, we can now have a high probability chance that the market is likely to stair step in that favor, in that direction, for at least a few months after that. So how can you incorporate this into your trading? Remember, whenever we're trying to get into the markets, we want a high probability chance that this is likely to continue running in this direction. We're trying to jump on, say, a trend. And one thing that's so important to understand is that when you're trading the markets, you only trade when the market's moving, when the market's trending. You don't want to get in the markets when it's just choppy and sideways, because you're going to get eaten up. Trying to predict and trying to get into those markets when the market is choppy and sideways, you're likely to get eaten up really, really, really bad. So how you can use this is use a trading setup. Now, whatever your trading setup is, when you are using a trading setup and when you're trading the markets, you want to apply it in a way where, okay, and when you start to notice these things, like when the market going sideways for quite some time, and then it starts to break out, what does that mean? Well, look how when gold was going sideways and then we started to break out. What did that mean? We're now likely to go in the direction of that breakout for at least a few months. Now, a few things can happen. When you do get the breakout, it can be a false breakout. Or if it's not a false breakout, obviously we're likely to continue down. And for me, this down bar through here, right here, was the confirmation of not a false breakout, because we had this low through here, which was the low of this sideways movement. And once it rejected it, and then came down, this here was the confirmation that it wasn't a false breakout. And we're now likely to see we're now likely to see at least a few months of downward movement out of gold. And that's exactly what happened. So if you're looking at silver right now, look at what silver did. Silver just really went sideways for quite some time. If I bring up my weekly chart here, you can see what I'm looking at here. Look at all that sideways movement from silver. So what does that mean? We had in silver a good 12 months of nothing going on with silver. And now we've just broken out. What does that mean to you? That means that we are now likely to spend at least 3 to 6 months of downward movement, not straight down, stair-stepping movement. Market runs down, has a bear market pullback, then goes for another run, has a bear market pullback. Right? It's going to step down. It's not going to just go down, 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 down. Now, it may do that. We don't know. But now we understand, okay, this is the bigger picture. The bigger picture is that we've just gone sideways for a long time here. And if I bring up this chart here, let me bring up the weekly chart. This is the weekly chart once again. And as you can see, that the market has gone sideways for quite some time. And now we've just gotten this breakout. So we really, if you look at this, actually, if you look at the market like this, so to speak. So we had this compressing down, and then we really had this level through here, didn't we? So you can see where we really weren't doing much for, I would say, at least, what's that there? At least, yeah, almost 1.5 years. All right, so almost a year and a half. Call it even 12 months. So that tells me now we have broken out to the downside in silver and gold. That tells me we now have a high probability chance of running in this direction. Now, depending on the volatility of the direction, but this now has a high probability chance of doing at least 3 to 6 months of breakout, because we had a year and a half of sideways movement. So now the trend on silver and gold is down, even though we may get bear market rallies. Yes. We may get some pullbacks. Yes. And expect that. So just because you don't ever want to just go short because I'm saying this is now likely to continue. No, you don't ever want to do that. But what you want to be smart about your entries and get into the markets where like if I look at if I look at, so for me personally, I am still short silver. I still have I still have my put options in silver. Why? Because it hasn't told me to get out of this market yet. Now I'm not going to just stay in this thing and wait for this thing to go down. I have a technical reasoning to stay into the trade, and I'm not going to get into that right now, but I have a technical reasoning why I should stay in the trade and so on and so forth. But we'll see what actually happens with this. Right? It's actually the SLV. The SLV I'm actually trading right now. So I got to have a technical reason why I'm staying in the SLV price, which is the SLV put options. And this down here, as you can see, is 2015, 2016 lows. I truly do believe that once we actually, the way that we're looking at right now, the way this market's been operating on this downside, that we have a really good chance of not only breaking 2016 lows, but heading all the way back down to here, which is the 2008 lows in silver. Now, I'm not saying that's going to happen, but due to the fact we spent so much time going sideways in the breakouts to the downside, we now have a good 3 to 6 months of downward movement. Again, not straight away. We might get a drop for we might go down for 1 to 2 weeks of sharp movement, and then we might get a pullback for a few weeks, and then another run, and then another pullback, another run. As long as the market keeps making lower highs and lower highs, the sellers are in control. So, once we get to 2015, 2016 lows, we may get a bit of a bounce. And then the bounce might create, again, a lower high in the markets. But once again, we have and this is the SLV price here, we have just broken out of this sideways range here. And now due to the fact of it's a confirmed breakout, it's not a false breakout, it's a confirmed breakout, then I would expect to see 2015, 2016 lows broken, and then possibly even broken back down and continue running back down to test the 2008 lows. Because once we break these 2016 lows, the next stop will be 2008 lows. Now, not straight away. Okay, I must put a disclaimer in this bitch, right? That's not straight away. Do not just be short in the market because I'm saying this. Some people are, oh, well, John, I short the market because you said this. Like, no, you still need a technical entry of getting in. You still need to have good stop management. So when it gets to a certain place, you're going to get out because it may not work on that trade. And you need to have all these different things in place, right? So don't just be shorting right. Right now is the wrong time to be shorting it right now. I don't know. This thing could have a bit of a bear market rally for a few weeks and then continue down. So that's what I'm looking at there, or I'm looking at there when it comes to I'm looking at the silver there. But this is how the markets work. I look at a trade that I did, all right, AGYS. This is a trade that I did a while ago, and I wanted to share this with you, to share it with you, to share it with you, like to show you how this works in the markets, right? So here we are here. So as you can see, what do we have here? We had an immense amount of what? Sideways movement. We had almost 8 months of sideways movement through here. So once we got this big breakout bar, I actually went long. That was because my setup said to go long. It was a breakout bar, and I had all my other rules in place to go long there. Now, what was one of the reasons that gives me a high probability chance of going long here? One, we are basically, what I'm trying to emphasize in this one here, right, is the sideways movement. When we go sideways for quite some time and then we get a breakout bar, guess what? We're now likely to run, depending on the volatility move, for a month or two. And as you can see, we actually had quite a nice stair-stepping phase for quite some time. So from the breakout to the high point, what did we have? We had through here, we had 1.5 months of breakout to the high side before it actually started to top out a little bit. And now we're just going sideways. So depending on the volatility move, now you never know how far and how long it's going to take in the markets. So right now, this one here is the first major stair step in the market. So this one here looks like it has a lot more upside to come when it comes to AGYS. But I traded this one. I didn't hold on through it the whole lot, but I captured I captured a good percentage of it. I think it was from here to here. I think it was, and then I got out, or maybe here from here. Anyway, I'm not talking about entries and exits here, but I'm just giving you an example of how you can use this hint, how you can use this in your trading. I'll give you another example. This is another trade that I did just recently. Right, as you can see, let me just do this here. So as you can see, what do you see back here? You see how the market's gone. See how the market just went sideways here? All these small little bars going sideways. Like that tells me that we're now just building up a bit of steam, right? We're building up and building up and building up a bit of steam. And then we've got the breakout bar. Now, again, I don't get on every breakout bar after sideways. I still need to have all my other rules in place. So I have another 4 or 5 rules that I need to apply before I get into it. But I got into this one here. One of the reasons was look at the sideways movement. Now, I look at trend analysis and all that sort of stuff as well too, but I'm trying to share with you what generally happens after a breakout of sideways movement for an extended period of time. And as you can see, this thing went sideways for almost 3 months. Almost 3 months, right? It rested, and now look, we're getting ready to go. And look what's happened to it ever since. This is a trade that I actually got into, and I'm out of it now, and I made a really nice profit out of this one. So I hope you can see that when you start to apply some simple foundational analysis of how the markets work, and when you start to see these things happening, it's like, I can now see that. I can now see this happening. This is on a daily chart. So once this is as you can see here, this one here. Now I'm not sure how long this run is going to go for. This thing can just keep going up, and I have rules and so on and so forth. But I'm just sharing with you what's going to give you the probability of doing well in the markets. Firstly, don't ever be getting into the trade because you think you're going to make a lot of money. That's the wrong thing to do. You want to get into the trade because it's a good trading setup based on what you know. I'm trying to give you some foundations of how the markets work, and maybe you can incorporate some things I'm talking about here in this session here to really help you move forward in your trading. Because so many people want to complicate it too much. And when you complicate it too much, it just becomes a barrel of monkeys, a barrel of monkeys. And it doesn't help you at all in your trading. And it really doesn't serve you at all. So, but as you can see, right, this is likely to happen. And when the market does go sideways for quite some time, and then you get this breakout, depending on what chart it is, depending on the breakout. So, and if I look at this weekly chart, I can see this weekly chart has been just really going sideways for quite some time. So this breakout that we're getting right now, guess what I'm expecting? I'm expecting that this is now, and I'll talk about this a bit later on, but there's generally 3 phases the market goes in, which is like generally 3 stair steps. And then the market will sort of go through a break. So that tells me right now there's a high probability chance. This MASI stock has now at least another 2 stair steps before it finishes this phase. What I mean by that is this whole section through here is what you call a time phase where the market's resting. And now this is the very first stair step. As you can see, the market ran up, broke back down, and then broke out. By the way, guys, when you start to get that combination on the weekly chart and the daily chart, whoa, powerful stuff. And I actually got out too early on this one here. But as you can see, this is sideways movement and then the breakout bar. Guess what? And now, because this is the very first stair step, now I'm expecting to see at least another 2 stair steps, because each phase generally has 3 major stair steps. So if I squeeze this chart right up to the weekly chart, let me share with you, like, look at this here. Look at all this sideways movement through here. See that sideways movement? All the sideways movement, and then we broke out. Stair step number 1. Stair step number 2. And look at this one here. The 3rd stair step is when the market started to peter out, when the market started to really slow down. That was sort of getting towards the end of that trend. Now that's a whole nother story here. I don't want to really get into this here, but as you can see, right, when you start to really analyze the markets, you can start to operate. Oh, look, this is what's likely to happen. Now, I'm not here to share with you and talk to you about my entries and exits, but it just happened to be so that I use a lot of what I'm telling you right now in my trading system because it works so well. It just crushes the market. And once you can start to understand a good trading setup and a good trading system and a good trading, like how this works, you can do well from trading. But you just got to know some simple things like this that's really going to ramp it up. It's really going to help you in your trading. Trading has been phenomenal for me lately because when you understand and you start to apply and you only take trades that have setups like this, plus that meets all my other rules, oh my goodness, high probability. Now, not every trade is going to make you money. So I still have good risk management. Not every trade is going to be a profitable trade. So I still have good risk management. Not every trade is going to make me a better return than the risk on the trade. Sometimes because I'm trading options, sometimes I might have a 60% loss on a trade and only generate a 50% profit on one trade. But I know a good percentage of my trades are going to run on for 2, 3, 4, 5, sometimes 10 times more than my average loss every now and then. But the probability comes from understanding how these markets work. So that's where, like, if people right now, and if you're looking at the Dow Jones, as I'm doing this session for you right now, if you're looking at the Dow Jones and you're looking at this weekly chart, by understanding what I just shared with you just then. Actually, you know what? Let me just erase everything off the screen here. By understanding what I just shared with you just then, we have been doing what? We have been going sideways now for quite some time. And now we're starting to build a bit of strength. Forget what you think, hope, or fear in the markets, because that doesn't matter. It's not like, well, the market's going to top. Like, you don't know the market's going to top. Focus on the market. The market is king. So we've been going sideways for quite some time in the Dow Jones. What does that mean? Well, it doesn't mean anything, right? Because you've got to wait to see what happens. But if we start to get a good break up and out, we could go for another good 2 to 3 months worth of upward movement. Why? Because we literally have been going sideways for over 6 months. So a 2 to 3 month upward movement still is possible. Why? Because it's been building that basing pattern. Not the same with not the same with the Nasdaq, but as you can see, the same with the S&P, right? Look at this here. This market's really been going sideways from here to here, and from here to here, we've been gaining a lot of strength from here to here, haven't we? We've been really gaining a lot of strength here, and now we're just hitting up against this level through here. So in the scheme, in the big picture of things, this market's been going sideways for quite some time. If we do start to break up out of this sideways movement and we get some good strong movement, guess what? We're now likely to continue up. That's right, continue up for at least 2 to 3 months. Why? Because we've just spent a lot of time just going sideways. And now the trend's making high lows all the way up. So you don't ever want to fight the market. The truth in the markets. The truth in the markets is what's going on the charts right now. This is the truth in the markets. And this is what's really going to help you when it comes to your trading, is simplifying your trading and using powerful foundations, understanding of how the markets work to apply it to your trading. This is how you're going to truly get ahead in the markets, and then start to have trading rules and a trading system based and built around how the markets work. Like, guys, it doesn't matter what market you're looking at. If I bring up, say, a weekly chart, it's like, why did, as everyone says, there's a whole fundamental reason why everything happens in the markets, right? Well, that's what they say. Since Donald Trump came in to the markets, that's what's caused this market to go up. Yes, that may be true. But guess what? Forget the emotions, forget the reasons why something does, and let's just go back to focusing on the charts. Let's go back before Donald Trump was elected. What was going on? Oh, the market was doing what? Sideways. For how long was the market going sideways? How long was this? 1.5 years, right? So 1.5 years. 1.5 years, the market was going sideways. Remember, guys, I'm just trying to show you example after example after example of one, how I'm incorporating this into my own trading because it's so powerful. But secondly, forget the reasoning why things happen. Just focus on the markets. So as we can see, right, if we do get a break up and out of this chart, guess what? We're now likely to spend. This one went for 1.5 years. I would say at least 3 to 6 months of upward movement. The market breaks up. What do we have here now? We have a high. We have a higher high. We have a what? This is now a higher low. So who's in control right now? The buyers. Then the market rallies up. Market has a little bit of a pullback. And then we have this up bar. So at this point in time, which is actually where Donald Trump was elected, at this point in time, we actually broke above previous highs. So now what do we have? We have a high and a higher low. Who's in control? Buyers. And what's actually happened? We actually we just broke out of a 1.5 year of sideways movement, and now we're breaking up and out, and we're closing on this on a weekly chart, by the way, weekly chart, and now we're closing here. What can we now expect? Now, again, we can expect a good 3 to 6 months, I would say, of upward movement. Now, that could be straight up, or that could be now. When I say 3 to 6 months, depending on the volatility. If it's very low volatility and it just slowly stair steps, well, you could expect 6 months of upward movement, maybe more. But if it's very strong volatility, well, sometimes that's going to last. That's only going to last a month. I've seen many times when we've had like a year worth of pullback and then 1 week of straight up upward movement. Like this one trade I got into. Hey Hugo, this one trade that I got into, I remember it was a while ago where the market just went sideways for quite some time, for about 12 months. And then we got the good breakout bar, and met on my rules. I got into it. This is a long time ago now. And I'm thinking, okay, we're likely to get at least 3 to 6 months out of this now of upward movement. And guess what? It only gave me 1 week of upward movement. Now, why is that? Because the stock actually went up about 50% in 1 week. Because it went straight up. So depending on the volatility of the move, it's all about price and time here. Depending on the volatility move. So now, when we're looking at this right now, doesn't matter what news say, or what media says, or what anyone else says of the markets. The only thing that matters is what the charts are telling us. That's the only truth. Trust me, guys. If you guys are struggling with the trading, it's because you're focusing on all this other bullshit out there and not focusing on what the market's telling us. Now, again, you apply your trading, and you do your trading, you apply these things to add the probability. It doesn't mean every single position you get into. Doesn't mean every single position you get into is going to generate profit. It's called a win-loss ratio. All that foundational stuff I'm not going to get into. So now, as you can see the breakout, right? So again, guys, I'm not saying that you would get into this position, because you still need rules around getting in and getting out of the markets, like a good entry signal. What does a good setup look like for you, et cetera, et cetera, et cetera. But I'm just sharing with you foundational stuff, along with foundational stuff, which is when the market goes sideways for quite some time, then we're likely to get a breakout. When we do, then that's when the market starts to see some really, really, really nice moves to the upside. And that's the reason why we got a decent run. Because as you can see, right, like this actually went for a run for about a year. Now, why did it go for a run for a year instead of 2 or 3 months? Because there's low volatility. Look at that low, just slowly now this is looking at that weekly chart here, by the way, just slowly stepping up, right? Weekly chart, slowly stepping up. And then what's happened? So now we've done so much. Now we had a big run. Guess what? We now need a rest. And now the market's resting. Building up what? Building up another basing pattern from here to here. to possibly getting ready for a breakout. Now, if the ultimate break is to the downside and it's a confirmed breakout, it's not a false breakout, because we can get a false breakout, by the way. There's been plenty of trades that I've noticed where we did go sideways and the market broke down and then had a false breakout initially. I'll share with you an example in a minute. But initially, so if we do get a confirmed breakout, which and as you can see, right, like if you guys have been watching this whole time, this here is the opposite to gold. What do I mean by that? Is if I bring this back here, notice we got the breakup out of the channel. We had a high, then a higher low, and then a continuation up bar. If I go back to gold, and that was on the weekly chart, but now let me go back to gold on the daily chart. Look at this here. Remember I said before, breakdown, lower high, continuation. This is now a confirmed breakout, and now we're likely to start to see that move. Because we don't know. We actually could get a breakdown and then a break back up. At that very time, it's a false breakout. Let me share with you an example. Let's go to Tesla. Whatever you believe in or whatever you think about Tesla, yada 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 yada, bing 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 bong bong, it doesn't matter, right? Oh, where the hell did that come from? What I'm sharing with you, right? Because I'll be, Tesla. It's like, who cares about your opinions? Like, my opinion doesn't matter. My thoughts don't matter. My thoughts mean jack shit. The only thing that matters is what the market tells you. What I'm trying to share with you now is that how this can also be a false breakout. What do you have here? What do you have through here? You have what? You have a market that's been going sideways for quite some time. Now, this is on the daily chart here, but I'm just sharing with you as an example. So you see this market, this market's really going sideways, right? We have this support down here, we have resistance up here, but it's not really doing much. It's not trending, right? It's not trending. So what I'm talking about here is that how the market can cause a false breakout. Now, how do you know it's a false breakout? When the market drops down, this breakout here can either be a true breakout or a false breakout. We don't know at that time. Right? We don't know at that time. Now, sometimes I do enter in on the first bar of the breakout. Sometimes I don't. It all depends whether my trading setup is telling me to get in at that time or not. I don't just get in because of the breakout bar. Again, I still have 4 or 5 different trading rules that I need to have met in order for me to look at getting in on a trade, i.e., trading with the trend and so on and so forth. But So when we're looking at the market, what causes this, right? So generally what we come down, and so right now, as we're looking at Tesla, right? We're looking at Tesla and the market's moving sideways here. What I would be looking for, if I say, okay, is this a false breakout? Is this a false breakout? Or is this a false breakout, or is it a continuation like I just shared with you for the bullish upside from Dow Jones, or is it a continuation on the downside like I just shared with you on gold? What's going to happen? So if we get a breakdown from here to here, guess what? That's now a confirmed breakout, because now we're confirming the breakout. Now, sometimes the market won't run up to resistance like this and then break back down. But if I open up my chart a bit more, and as we're walking through this and watching this, right? Sideways, sideways, sideways. Oh, have we broken down? No. Oh, still going down, still going sideways. Not much happening yet. Still haven't broken out of this. Look at this here. Look at it now building this basing pattern through here. So now we're building even another sideways phase. So now and this is the way that I'm thinking about it. Now we're building a sideways phase, and now the market's going through here. Is it going to break down, or are we going to? Oh, bam! See that? Look at that candle there. What is that candle? That candle is now breaking back above that resistance level. That shows me that we did not break down like we saw on gold, which started that downward movement. It broke back up. So what that tells me is now we have a high probability chance, once it's happened, on the short term anyway, on the short term, of running back to the running back up to the top up here. So when I see this, I then have a target. And I'm not saying you do this every single time, guys. I'm not saying you trade this, but I would have a target. And sometimes I'll have a target without me even getting into it, because it may not meet my trading rules. But I say this has a really good chance of now running back to the top of the side of this channel. And look what happened. It ran straight there. Guys, give me a yes in the chat box if you're just absolutely loving this education, if you're really enjoying this sort of stuff, because this is stuff that really matters to you in trading. Trust me, guys, over the last 15 years of being involved in the markets, I've gone through hell and back from trying to understand what is it about? What is it about the successful that actually get ahead in the markets? And how do you truly trade the markets in a way that you can take everything out and everything else? This doesn't matter. My opinion don't matter. Is if it's not coming from the chart, if the chart is not doing something right now, then my thoughts, me saying, well, I think this is the bottom. Well, I think this is the top. No, don't think. Just trade. We need to remove the emotion as much as possible when we're trading the markets. Because when we remove the emotion from trading the markets, and it's all about trading the markets based on what we see, not what we think, hope, or fear. Never get into the trade. Never get into the trade because of what you think, hope, or fear. Never get into the market because you think it's going to be the top or because you think it's going to be the bottom. Never get in trade because you think this is going to be a big winner. Therefore, you're probably likely to put a lot more money on there. Never get into trade because of what you hope, right? I hope this is going to work. No, you shouldn't be hoping, because the fact of the matter is there's a win-loss ratio to every single system. You never know which given trade is going to make you money. So there's no sense hoping. It's just accepting the risk up front. If this is a losing trade, this is what my risk is on average, and I accept that up front. But I know if I take 20 of these trades, I'm going to have at least 70, 80% of them going to work out. And I'm going to have a good chunk of those that's going to like do 4, 5, 6, 7 times my average loss, which is called letting your profits run and cutting your profits early. Right. So this is just an example. Again, guys, I must make myself very, very clear here. I'm not saying that I would get into Tesla once it's done. I'm not saying that this here was an entry signal for me, right? Because I have a trading system. Once I get into the trading system, my trading system, I'm not saying that. What I am saying is that I'm just telling you how to read the markets, how to read the chart to give you probability. So even if I don't get into something, I'm saying, this is what's likely to happen in the markets because of this. Again, it may not have met my trading rules. It may have. I'm not going to talk about that. But what I'm trying to teach you guys is that what happens when the market goes sideways for a while and then breaks out. Are the two things going to happen? It could be a false breakout, like Tesla, and it's going to give us a complete false breakout, and we're going to run to the upside. That's what Tesla did. Gave us a false breakout. Or we're not going to get a false breakout like gold did, and it confirmed on that down bar, on that lower high. Right there. This breakdown was saying this is now a confirmed breakout out of this sideways movement, and now we're likely to spend some time to the downside. And away we go. And if you pay your trading software a bit more money, they actually put a trend line there and it tells you where the exact resistance is going to be. I'm only joking. Right? So this is just so critical, guys, when you're looking at the markets. Understanding, as you can see, right, I have nothing on the screen. Nothing on the screen apart from charts. And I'm telling you how the markets work, how they operate. Go look at any market out there. So when I'm looking at the gold stocks, this is, again, guys, this has nothing to do with my opinion. This has everything to do with how to understand how the markets work. When the markets go sideways for a long time, you can better believe that we're likely to see a big breakout. So let's bring up the GDX here. Let's bring up the weekly chart GDX. So looking at the GDX, what actually happened with the GDX here? We did what? We went sideways for how long? Almost 1.5 years. So what am I expecting? I'm expecting at least 3 to 6 months of downward movement. 3 to 6 months of downward movement. So therefore, people who are trying to buy gold stocks right now, in particular the GDX, I just had one of my private clients make a I think it was a 60 or 70% return shorting gold stocks. Why? Because one, we actually had a setup, but secondly, it was because obviously trading with momentum, which simply means whenever the market breaks out, it's starting to pick up. It's starting to trend a bit. So right now, based on what I've just told you guys and what I've just shared with you guys there for a minute, as we can see that we've had this pretty much sideways movement for quite some time, and now we're breaking out to the downside. And if I used a projection tool, measure from the high to the low and project that out, then the target for at least this target here would be at least this low through here. So that's where the first level, I believe it's likely to get down to on the gold stocks. So people who are trying to buy gold stocks right now, trying to pick the bottom, are absolutely crazy. Same with silver and gold. Yes, we make it a bear market rally, but the sellers are in control. The sellers are majorly in control. And as I said before, I've tried to share with you example after example that now we've broken out of this sideways movement for quite some time. And what do we get here? Lower high, and a lower high. Now notice this market just kept going down. It didn't break down and then potentially cause a false breakout. It just broke and then kept going down. So the first target for me would be $17. And then ultimately I see this thing probably breaking the lows of 2016. Now, I must put a disclaimer on this thing here, guys, because it's not guaranteed, right? We could go down to $17, and that could be the bottom, and then we go through a bit of a V bottom. That's the reason why you still want to have good risk management and not just get into the trade based because you think it's going to work out, or just based on a trading technique. You never ever want to do that because there's a whole bunch of ranges of reasons why, but you never ever want to do that. And the same with the silver market, the same with SIL, or let's go to the silver ETFs. Look at these silver ETFs. Look how sideways they've been, like very, 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 very slow sideways downward movement, really, overall. And now we're getting the breakout. So people who are trying to buy gold and silver right now, people who are trying to buy the bottom in these gold stocks, these GDX, because they think inflation's going to happen. And there you go, right? There you go. Exactly what I just said, because people think something is going to happen. You never get into the trade because you think, hope, or fear. You think it's going to happen, you hope it's going to happen, or you fear. I'm fearful the market's going to crash, so let me get in right now. I'm fearful I'm going to miss out on the next big boom. Bitcoin. People have been going crazy at Bitcoin. What has Bitcoin been doing? Check that weekly chart. Lower high, lower high, lower high. We've been going sideways for a while. I see a $3,000 Bitcoin, just so you guys know. Oh, John, that's not going to happen. Maybe. Well, my charts are telling me if we break below where we are right now in Bitcoin, we're now likely to see a 3,000. My target will be 3,000 Bitcoin. Again, I'm just going off based on what the charts are telling me. So this is the way that you want to be able to view the markets and understand how the markets work. And please, once you start to utilize this in your trading, it's going to make a world of difference when you're trading. A world of difference. Now, once again, all we're doing here is we're stacking the odds on our side of doing well in the markets. That's all we're doing. It's not about being right or wrong, because it's not about me being right or wrong. Because guess what? Even though we get this pattern and we get a breakout, and I'm saying we're now likely to get a 3 to 6 month downward movement, that's not even guaranteed. Because the market can just say, you know what, screw this, and create a bit of a V bottom, straight eye. So we could actually hold here right now. We could hold here right now and start to rally up like that. If that does happen, then we can start to change our view of the market. Because remember, we bend and mold with what the market's doing. We bend and mold and flow with what the market is telling us. But as we see it right now, we only trade with what we see, not what we hope for. And what we see right now is we see a lot of downside in the market. So therefore, the way that I trade anyway is I'm looking to jump on something that's moving, not something that's going sideways. So therefore, I use my trading setup in times like this to wait for. And I'm not saying that's going to happen, by the way. To wait for really good trading setups. And then I start to apply my analysis, which is moving averages, volume, trend analysis, so on and so forth, to start to incorporate when I want to get in. So as I said before, for me right now on the SLV, there has been no technical reason for me to get out of SLV. I got into SLV, and you guys know this. I got into SLV right here on this bar right here on the breakout. Once I got on SLV, I'm still short right now. I still have my put options right now. Is the market going to drop down and keep going down, and I'm going to generate even more profit on those put options, or is the market going to turn? I have no idea. I don't need to know. And this is where we're going to go into a whole wide range of the psychology of the trading and the understanding of how to approach your trading and so on and so forth. But that's another long-term story there. So yeah, anyway. I'll do that in another live stream. So there we go, guys. Let me answer some questions for you. If you guys got any questions right now, let me answer some questions. Please, guys, this is some of the most powerful things you're going to understand about trading the markets. And it's taken me so long in my trading career to stop focusing on the crap that does not matter. Stop trading the markets when it doesn't serve me. Like I think something's going to happen, or I hope something's going to happen, or I fear something's going to happen. All that doesn't matter. All that matters is, do you have a trading setup that meets your rules? Yes. Cool. Does your trading setup right now look the same as your next trade, as your next trade, as your next trade, as your next trade, as your next trade? Because your trading setup, I'll show you right now. I can show you screenshots after screenshots after screenshots after screenshots of different. And let me actually just share this with you right now while I'm live on screen. Like if I share this with you, right? This is what you need to do with your trading, by the way, guys. Look at this screenshot. Look at all these here. Look at all these folders here. I have long-term setups. What does a long-term trade look for me? That I'm going to hold on and use I'm going to hold on for a lot more and use a bit more of advanced exit points. A short-term trade or a continuation trade. Like I have all these different trades, like bullish and bearish. Look at all these screenshots here, guys. Like this is what you need to do to build your foundation. Like, are you building your foundation of confidence? All these setups here look almost identical to each other because they meet all the rules. Go to bearish. There actually hasn't been a lot of bearish setups lately, but there has been. And I'm still adding to it right now. Let's go to continuation trades. Look at all these here. All these here are different continuation trades. Now you can see it says before and after because I like to see what it actually looked like before the setup and then after the setup. Guys, this is what we need to do to build your confidence around your setup you're taking. Because if you're taking one setup right now on the chart, your next 20 trades should basically meet the same rules than your last 20 trades. And then out of those 20 trades, you can have a win-loss ratio. And you don't know which one's going to be profit. You don't know which one's going to be loss. But how do you build that confidence? Screenshots after screenshots after screenshots. Look at this here. Look at all these screenshots. Just folder after folder. Look, guys, this is the work that I do behind the scenes. And I hope you can see that when you are doing this is the work that needs to go in to build your confidence around your technical setup. Because even though a coach can teach you, all right, you can come and join my coaching program if you want. It's closed right now, but if you want to check out my coaching program, by the way, make sure you click on that link in the description and go sign up for the free trading course. And then when you go through the free trading course, you'll be able to see more information about the coaching program. If you want to become my coaching client, and whenever I do open it up, you'll be able to see the cost involved and all that sort of stuff as well too. But it's closed right now. But if you want to be able to get on there, make sure you're on my list. So click on that very first thing in the description for freewbstraining.com, freewbstraining.com. If you're on my list, whenever I do open up a few spots, because I only open up about 4 or 5, or between 4 and 5 spots at a time to join my private coaching group. But if you want to be able to learn more about that, you can see it there. But I'm just trying to share with you guys that this is what we need to do to continue building your confidence of what you need to do. And every single one of these trades and every single one of these setups here, I know exactly what to look for. I know exactly the setup I'm after, and so on and so forth. So guys, this is what you need to do. Okay. If you are serious about trading, one, you find your technical setup. And then secondly, you need to go back test that. Back test and back test and back test. And we're talking screenshots after screenshots after screenshots. What is this doing? This is building confidence. I've seen this before. I've seen this set up 1,000 times before, or I've seen it set up 100 times before. And I know majority of the time when I do get in, I'm going to generate a return. And sometimes I'm not. I must accept that risk up front. So anyway, so let me answer some questions here for you guys. Let me see if can I pop this out? All right, there we go. Cool. All right, so let me go start from the top here, and I will. So if you guys got any questions, then let me know, and I'll be able to help you guys out with any questions that you have. Again, guys, the bottom line is that my opinions don't mean nothing. My thoughts, what I hope for, what I think is going to happen, doesn't mean anything, because you just never know. That's the reason why it's a trading system with good risk management, and if you've got a good trading setup that you have confidence in, most of your trades should run on, or more trades than not should run on for profits. And as long as you're holding on for, as long as you're letting your profits run and then cutting your losses early, you're going to do well in the markets. You just got to not be able to trade, fear. It's like, oh, there's a profit there, let me get out. You're going to have the ability to be able to let your profits run as well. John, do you play short squeeze sometimes? What I do, NASDAQ, is I go short when my trading system goes short. It says go short, not because I just think this one trade is going to go down. Remember, guys, trading is never about this one trade anyway. Trading is never about, oh my goodness, I'm going to make $1 million in one trade. I guarantee if you have that thought, it's all, tell me what you're doing, because I'm going to do the opposite. I think we're going back to 2016 lows. Yeah, I think you're right. I think you're talking about the SLV there, by the way. I mean, not SLV. Yeah, the SLV. So I actually think we're ultimately going to head down towards the 2008 lows on silver there. But that's my thoughts. I'm just going to continue watching the market. And right now the market continues staying weak, so I'm just going to follow on the market. The charts don't lie. Exactly right. Hey John, when the resistance is first broken, is it safer to always wait for a pullback, or do you normally buy right after the first breakout? Euphoria Crypto, as I've been saying through this training session, that you don't just get out because it's a breakout. You get into a trade because it meets your set of criteria of what you're looking for. So yes, I'm looking for a breakout bar. Yes. But it needs to meet a whole bunch of other rules for me to be able to get into that trade. So the question for you is that, what is that rule? What is those setups for you? So, and the answer to that is that Euphoria Crypto, if you're trading the markets and you don't know when it is better, when the higher probability time is to get into the market based on a set criteria, Well, that's where you need to start. That's your foundation. And do not be placing a live trade until you've built that foundation. What is that? Back testing. Oh my goodness, John, back testing. Are you serious? Yeah. How badly do you want it? Because that's what's going to take you to become a good trader in the markets. And I'm showing you what I do here myself behind the scenes. So for me, you have a higher probability chance of when we're breaking above a significant high or significant low or previous resistance, previous support. But I still need to have my trading set up. Just because it breaks, it doesn't mean it's going to be. Sometimes put it this way, guys. Sometimes a break can be too big of a breakout, and now it's a low probability trade, or a low probability breakout. And sometimes it can be a false breakout. You just gotta. It's all about having a set of trading rules. Many small bars and one big bar with volume. That's some of the trading setup that I use. Yes. But it's not all the rules that I use. I use a whole bunch of, I use another, I think it's another 3 or 4 rules with that. Yes. To make sure I'm getting into a very high probability trade. It's not just small bars and breakaway bar. But I use a whole bunch of other rules there. If you do that, then you know, it's not going to work well for you. You need all these other rules. Show us the candlestick chart, John. Opinions mean nothing. It's the story the charts are telling you. Exactly right, Hugo. Exactly right. And right now, people, I've been arguing, or not arguing, but people have been trying to fight with me about the Dow Jones right now. Oh, John, the Dow Jones is not an upward trend, isn't it? Isn't the Dow Jones an upward trend? Well, it's making higher lows and higher highs to me. I don't know what you're trying to, what you mean there. What's Elon Musk preparing as strategy for next earnings? What's Elon Musk preparing as strategy for next earnings? That is something that you have no idea, and you can never predict NASDAQ, so don't focus on that. So the second breakout is really the confirmation. Hugo, the second breakout, it's not really the second breakout. It's the breakout, then a lower high or a higher low, depending on the breakout. That continuation is now confirming to me that it's not a false breakout, and now we're likely to trend in that direction for quite some time. But guess what? Even when I say it's likely to do that, we could stop and completely turn it back around, where it now becomes a false breakout. So that's the reason why, guys, you don't just get in based on what I'm saying in this session here. It's so important. Just because you get a sideways and then a breakout bar does not mean you just get into that. Because you have a win-loss ratio. You need good risk management. All these other things that goes into it. What I'm here right now is to teach you one trading technique to help you with your trading, and then you start to apply your trading system, whatever your rules are. And remember, every single trade you take must look identical to each one. So if you showed me your last 20 trades, and if they don't look almost identical to each other, without you making it up, they don't meet the same round of rules, then you're gambling. You're hoping. And that's not the way long-term success is. Long-term is having your trading set up, your exact rules, and then taking that. Most of them are going to generate a profit, or depends. I don't know your strategy, and then some of them will make a loss. I don't know which ones are going to be a profit. I don't know what's going to be a loss right now. I'm in trades right now, and I don't know which, at the end of the day, which one's going to be a loss, which one's going to be a profit. But I do know that even if I'm 50-50 right with these setups, I know there's going to be 1 or 2 of those trades that's going to turn into a really, really good profitable trade. It's just a numbers game. But I don't know. My job is just to take the trade and then just trade what the charts are telling me. But as I said before, guys, even if your last 5 trades doesn't look almost identical to each other, then you're gambling. You're hoping, you're praying. There's no consistency there. Every single trade you take has a random outcome. There is a random outcome, but it's built in with the probability of an outcome. How do you see the probability of that outcome? You take the exact setup with the exact rules 20 times. And over those 20 times, now you see the win-loss ratio. But you can never know up front, even with your trading rules, with your very high successful trade, you can never know which trade is going to generate a profit and which trade is going to be a loss. You just cannot know. So your job is to see your setup, not think and take it. Have good risk management and accept the fact that this trade I'm taking right now could be part of the loss in the win-loss ratio. Knock that out of the park for you guys. So I hope that makes sense. What would your stop be? Loss. Well, the stop is based on your strategy. The stop is based on where you know it's best to get in and get out of that market. So I can't tell you where your stop would be. So gold is on sale right now. Buy the dips. Good on you, Manny. Keep buying, I'll keep shorting it. Came back from the Robert Kiyosaki seminar yesterday, and I still think the way you look at trading is better than what I saw. Your experience is priceless. By doing that, you're learning to read the markets. Well, firstly, thank you, Hugo. I appreciate that. Yeah, I've lost a lot of money in the past by doing stupid mistakes. So I know what works and what doesn't work. By doing that, you're learning to read the markets charts better, even though you don't get into a trade. So you become a better trader. Awesome stuff. Exactly right, Hugo. That's what this is all about. That's exactly what this is all about. And what this is all about is just simply learning how to read the markets so you can get a good understanding of a pulse on what's happening in the markets. And the more you can do that, the better you can read the chart, the better trader you'll be. Check out that double bottom. Charts a week on Bitcoin. Exactly right, Hugo. Hey, John, do you mentor students overseas? Where would that thing go? Oh, yes, I do. Yes, I do. I do mentor. Once again, you throw a crypto. If you're interested in my coaching program, it's closed right now, though. But if you go to freewbstraining.com, firstly, I'm going to send you a free trading course. You're going to get lots of value. And then whenever you'll be on my list. So whenever I do open up a few spots, because I only open a few spots at a time, then you'll get an email or something about that to let you know when I do. They normally get taken up pretty quickly, and then I close it down, and then I open it up again a little while later. But yeah, and I just do it whenever I feel like I can actually put it in. But my main focus is trading, guys. And that's why even on this YouTube channel, I've really slowed down on doing YouTube videos. I just want to, my main focus is just really, really, really crushing it with trading. So Hugo says, why not take profits now? So Hugo, you're talking about silver, right? The SLV. I think that's what you're talking about there. So within that, let me go through here. Yes, yeah. Well, the reason why is because my strategy, when I got into this trade, I knew technically when I'm going to get out of this trade, Hugo. Again, it's all about, and this is one of those trades where I'm letting my profits run and keeping my losses short. So it's all about not getting too fearful of the market and just letting the market do its thing. So for me, I haven't gotten my exit point yet. And I know exactly what I'm looking for. I'm not going to explain it here, but I know exactly what I'm looking for to tell me, okay, now is the time to exit the markets for either for a loss or a profit. But right now, it hasn't given me that technical reason to get out. So therefore, I'm still short. And until I get that, I'm not getting out of the market. I'm just going to be patient and let the profits run and not be fearful of losing the profit. So many people are like, oh my goodness, if there's the profit here, I'm going to lose it. So many, I guarantee if you have that mentality all the time, that's when traders may have, that's where a lot of traders may have a successful trading system, but they take profits too early and they let their losses run. It's like a bad move. You know, if the whole benefit, right, is to get out early for a loss. So I actually have my loss in a section where I'm going to get out with my option there with my trading. But then I also know exactly what I'm looking for to get out on a profit. And so it's all about, not having removing your fear of, oh my goodness, if I don't get out now, I'm going to move this profit. And if it holds right now, this could be a double bottom. Oh my goodness. And if this rallies up here, oh my goodness, I'm going to be losing out. Right? Right now, I'm about 100% profit, somewhere around about there on this one. Guess what? That could be a loss tomorrow. Somewhere it could just totally turn around and go back up. I'm okay with that because I know more times than not when I get into a really good trading setup of my own and I let the profits run and I keep my losses short, every now and then a good profit, like 100% profit, is going to completely turn against me, and I'm going to get out with maybe even a loss, maybe 20% loss or something. But I know more times than not, once I've got into a good trading setup, it's my fear of getting out early is only going to stop me from making, I've done that so many times. I've gotten out with, say, a 50 or 60% return because I was fearful of losing the profits. But then the charts told me okay, it's not time to get out yet. The market is still moving, so it's not time to get out yet. I look for technical things and look on the charts, but it told me it's not time to get out yet. And like there was a trade just recently. I'll give you guys a recent example. A trade that I took a few weeks ago. I got out of that trade for, what did I get out of that trade for? So there was one trade that I got into. Let me just bring up my trading register here for a minute. It's actually on my laptop, my trading register. So if I look at my trading register, there was one trade there. Where are we here? All right, cool. All right, so there's one trade here that I took for, I took for a bit of it was close to a 50% profit. Right, it was close to a 50% profit, but that was me saying, okay, I'm happy with this profit, I'm taking it. But hang on a minute, I limited myself with that trade because there wasn't any technical reason for me to get out of that trade, and that was 2 weeks ago, and still to this day there was no technical reason to get out of that trade, and that trade right now is about 150% profit. Now it's not about being greedy; it's about having the mentality of and this is such a big thing. When you're trading the charts, you trade the charts, not percentages or anything like that. You say, okay, I'm going to stay into this until my system tells me it's now time to get out. And having that ability to be able to let your profits run and keep your losses short, but know exactly what to look for is such a big thing. Now I talk a lot about this with my private clients, and there's a whole wide range of things that goes into of trading. So I hope you guys understand that. But once you start to emphasize this here, I cannot stress the amount of times or how much it's going to help you when you're just not fearful of losing a profit. Because that's what a lot of people do. Like, oh my goodness, there's a profit there. And then they get out early. It's like, oh my goodness, there's a loss there. Let me just hold on. Let me see if this is going to work out. And it goes bigger loss and bigger loss and bigger loss. And that's the worst thing you can do. Don't have any fear in the markets. And how you do that is make sure you're trading a small amount where the wins are not exciting you and the losses are not hurting you. Because once you go through that process and once you go through that understanding of that, your fear is stopping you. Your fear of getting into a trade, which is a good setup, is stopping you from generating a good return in the markets. Or your fear of missing out of losing the profit is stopping you from having those good wins, which sometimes you need, right? Because sometimes you're going to go through a period where you're going to have maybe 6 wins and 4 losses, or you might have a 50-50 win-loss ratio every now and then. But guess what? You could be doing that, and your average loss is, say, 20-30% using options here, trading a small percent of your account at any one time. That was the average loss for say 5 wins or 5 losses. And then your 5 wins, you might have had 3 of those where you might have had a profit of 40-50%. And then 2 of those trades, things ran on for 200%. Bingo. That's game over. Set the game up to win. But because we're trading too much, and because we're fearful of the market going against us and all that sort of stuff, that fear is robbing you so much. And all that comes down to is your confidence in your system. And you haven't done enough back testing. You haven't seen it so many times. You're like, oh my goodness. Most of the time when I get into a trade, if I just sit on my hands and let the market do its thing, I'm going to let my profits run. And every now and then I'm going to see a good profit turn into a loss. That's okay as well too. Because guess what? Majority of the time, I'm going to end up getting out with a more profit if I just let my profits run. And it's not being a greedy thing. It's not being greedy in the markets and all that sort of stuff. What it's all about, man, I just burped the microphone. Sorry about that. What it's all about is managing that. And when you can start to get this sweet spot where you have a good trading system, you trade the same setup every time, you're not fearful of the market, where you're just going to jump in every single trade no matter what. And you start to apply rules. Okay, I'm getting in here. All right, cool. I'm going to get out of the market when the charts tell me. And I can't tell you how many times, like I was listening to one trader a while ago, made a lot of money from the markets. And he said his biggest shift was when he started to get in and out of trades based on what the charts are telling me, not based on anything else. That's when his trading started to go through the roof. It's just such a, but you can't experience that if you're trading too much, or you haven't done your hours and hours and hours and hours of backtesting and screenshots. So you know in the back of your mind, oh my goodness, if I just step up to these things every time with good risk management, I know most of these trades are going to take. I'm in about, how many trades am I in right now? 1, 2, 3, 4, 5, 6, 7. I'm in 7 trades right now. Small percent of my account on each of those trades. I guarantee you that I already know that at least 80% of those trades are going to be profitable trades. 20% are going to be losses. Do I know which one of those trades are going to be losses? No, I don't. I don't need to know. And I know out of those 7 trades, I'm going to have at least 1 or 2 of those there's going to be really good wins out of it. Like the market's going to really take off in my direction, and I'm going to pick up a good 2, 3, 4, 500%, maybe 600% return on the trade. Do I know which trade is going to be? No. And to do that requires me sometimes to be in the market for a month or 2. Now, I don't just stay in the market for a month or 2. What do? I let the charts tell me when it's time to exit the market. And that, guys, is how you really get ahead in the markets. And I hope you can see, guys, I'm doing this here not to get anything from you, because I have nothing for sale right now. When I do open up my coaching program, you better believe that's going to be expensive, because it just is. I don't need to do that, but I choose to do it every now and then just to help people out. But trading is the number one thing. And once you start to know how to trade, and you start to get the emotions right and the foundations right and all this sort of thing, that's when everything starts to work out for you. But it takes a while to get to that point. That's what I say with all my private clients. I'm like, it's going to take a while for you to get the foundations, to get the chart reading, to get the trading systems, to believe in the trading system. It's going to take a while. But if you keep working on the stuff that you need to work on, and everything I've been saying in this session, you're going to crush it. You can crush it. You just got to get out of your own way and stop getting in the market. Stop thinking, basically. Don't think. You have your entry that you know that works because you've seen it hundreds and hundreds of times. You get in and you get out based on what the chart's telling you. You do whatever you can to keep your losses small. Now, sometimes I don't do that because I trade options. So sometimes I may get out with a 30 or 40% profit and I've got a 60% loss. Sometimes that happens. Now, as I said before, I do know that majority, I know a good chunk of my trades are going to be really, really good profits. So they're really the things that are going to help me out. And again, I never know up front which trade's going to be the loss, which trade's going to be the profit, and which trades are going to be the big wins by letting the trade run on. Heck, silver might be that right now. I don't know. In another 2 or 3 weeks, I still may be actually in this trade. I don't know. With a good one, with a really good, really good profit. Instead of looking at 100% profit, I may be looking at a 400 or 500% profit or whatever profit. I don't know. I could be looking at a loss as well too. Being okay with that because it's just one trade. I'm not focused on this one trade. I look at it as a basket of probabilities. And as long as I trade my system properly, I'm going to continue to crush the market. See, it's never the trading system you have to worry about. Like, I can teach you the trading system very easy. I can teach you what to look for. But that doesn't matter, because if you're not taking the trade every time you see it, if you're fearful of getting into trades, if you're getting out too quickly, if you have no confidence in the system, then you're never going to do well in the markets long term. That's why it takes work. It does take a lot of work to get to that confidence that you know inside your heart that this thing rocks. And I just have to get out of the way and take it. There is no thinking. There is no, well, I think this is going to be the profitable trade. I don't know. Jordan, is this going to be a good setup? Oh, I don't know. Is this going to be the profitable trade? I don't know. And I'm like, say to some of my private clients, this setup right now has the makings of being a really good profitable trade. Like a really, really good, like where we're going to be in it for, a month or two. That's what the makings are that I see in some of their setups. And then some of the setups, I'm just like, this is probably going to be a short-term trade. And I'm going to be in and out of it within a few days. But I don't know. I'll let the market tell me that. Sometimes I can be in and out within one day. I get in today and I'm out tomorrow with a loss. That's okay. Next. And once you get to that sweet spot, it can absolutely just do well for you. Guys, if you have any more questions, then please let them know. Please put them in the chat box and I will do whatever I can to help you and assist you with that. Helping and assisting. All righty, guys. All right, so that's the end of the session for me right now, guys. Have an amazing day. I hope you really enjoyed this. I hope that this session has really bring some light to your trading. And if you watch this session 2 or 3 times if you have to, because I guarantee you there's so many gold nuggets that I've dropped in this session here that's really going to help you with your trading. Guys, have an amazing, amazing day. Have an amazing week trading. Have an amazing weekend. Please start to apply some of the things that I've talked about in this session here. You can do really well in the market. You can crush it with the market. You just got to know what to focus on and how to do that. Guys, go to freewbstraining.com to get your free trading course. And if you're interested in getting my coaching, then you'll be able to see that as well too. And when I do open it and so on and so forth. So go to that right now, freewbstraining.com. Grab your free trading course to help you even more with your trading. That's about 12 videos long. Oh no, it's 10 videos long, about 12 hours in total, content, systems, so on and so forth. And we can go from there. So, all right, guys, have an amazing day, and I'll speak to you soon.